Anna Neves and Daniel Pellegrini rent in the city where it's close to work, but hope to buy their first property together in the new year.
We're looking to get married next year, so we've just kind of been sussing out the dream home, working backwards if you like. Well, that's from my perspective.
To get to that dream home, the couple is looking at investment properties first.
Looking for a land and house package because the real value is in the land. And that's what is going to get the capital growth that we're going to need in order to build the equity.
And then use that equity to buy where they want to live. The good news for investors like Daniel and Anna trying to enter the market is that property price growth is expected to moderate next year.
I think the days of double-figure house price growth are now behind us.
Domain expects house prices will grow modestly, with Melbourne and Canberra performing best. But prices for units will be mixed as new supply comes on stream. Weaker values are forecast for apartments in Brisbane, Perth and Darwin. Andrew Wilson sees value in some regional markets in New South Wales, with the state's outperforming economy underpinning property price growth.
We're seeing Wollongong, Newcastle, Ballina, very strong regional markets at the moment, strong prices growth, and I think it's that affordability advantages that those markets still have some proximity into Sydney.
Peter Esho says affordability is key.
I think the $500,000 to $1 million price point is probably the most attractive. It's a price point where there's natural demand from first-time investors.
Finding that elusive property at that price point is the challenge.
Penrith is an area that's quickly emerging, quickly changing. It's out west, it's on the train line, it benefits from the WestConnex expansion and the potential for Sydney's second airport. That's very, very exciting. In other areas, you really have to venture interstate.
But a changing interest rate environment may impact some parts of the market.
Anything above the $1 million price point will struggle. Anything from $1 million to $2 million or $1 million to $2.5 million will really be impacted by the bank's changing rate policy, particularly towards investors.
Lenders have already moved standard variable rates on investment property loans independent of the Reserve Bank.
They have a responsibility to shareholders by pushing up interest rates for mortgages,
which may take some of the heat out of the market.
To sort of soften the investment side of things, I think it's probably good for prices and a good opportunities for future buyers like ourselves.
Sending them on their journey toward their dream home.